370 for a longer term horizon. Moving on to the next idea, which is low risk, low reward, is Cochin Shipyard at 360 for a target of 500. This company is into shipbuilding, a government-owned company with major orders from Indian Navy. They are getting orders from global firms, especially from Norway. Internal state governments are also giving orders for internal waterways. That's a big positive in terms of order book. Dividend yield of 6% of Cochin Shipyard is very generous and comforting for investors across. So we expect a full year earning for Cochin Shipyard to be around 50, a P multiple of 10, which gives us a 30% upside and a target of 500 for Cochin Shipyard if you hold the stock for 1 year. That's a low risk, low reward idea. Thanks.
Okay, like we mentioned at the start, we are going to start with our query segment. In fact, I would encourage everybody who's tuned in live to ask all of your questions on social media. We will start with a question from Shanmuga. Shanmuga is asking about IOC, Indian Oil Corporation. Not doing too badly in trade today, Kunal, and this is a one-year query. Shanmuga has bought at levels of 97, as many as 200 shares. Can he hold for 1 year is what he's asking.
The viewer's query is on 1 year, so I'm looking at a little broader formation on the chart. Alex, this looks like a perfect curve formation. In that curve formation today, the counter is also decisively, taking the bounce from the support level itself. So this level is very good level to initiate a new buy also, because the viewer already has a position. You can definitely hold on to the position. Keep a stop loss of 84. I think this counter, once crosses 104 mark, can show up to 130 to 135. So yes, absolutely go on with the counter.
All right, our next query is coming in from Anup Kumar. He wants the view on Web of Global at the current level, whether it's a good to buy this particular counter for a longer term, as the share is going to go in for a stock split 1:5 ratio. I'll come to you, Raghavendra, on this particular counter. What's your view on Web of Global? Makes sense to invest at current level for a long term?
To see Web of Global, the recent run-up is very encouraging. And the promoters' commentary over the last 2 quarters in terms of very slow and steady approach in terms of their capital expenditure and growth plans is comforting. This stock split is a welcome move for retailers as well as small investors. So we believe Web of Global at current levels can be bought, or every dip in Web of Global can be taken as an entry opportunity. Hold this stock for a 20% upside for a horizon of 1 year going ahead.
All right, the next question is on India Mart Intermesh, and this one is coming from Palash Agrawal. Palash is asking whether it can be a buy at levels of 8,000. Of course, the stock is currently trading significantly lower in trade today, down about 8%, and in fact it's trading at 8,118 or thereabouts. Kunal, do you anticipate that it can fall further to levels of 8,000, and would you pick it up at that point?
So Alex, if we look at the last 3 months formation on the chart, since January 2021 till now, the counter has made a decisive bottom at 7,600. But on the higher side, it's constantly facing resistance at around 9,000 mark. Just day before yesterday, I think it made a high of around 9,000 and it's falling from that level itself. So don't be in hurry to jump and buy on the counter. Keep the level of 7,500 in mind. Once it reaches near to 7,500, I think it will offer good risk-reward ratio. We can think of going long. Structure is definitely not negative. It's sideways consolidation. That's why we are recommending to buy near the support. 7,500 to watch out for. I think the risk reward ratio will be fair. I expect the counter to reach then 10,500 kind of zone in next 3 months time.
All right, our next query is an email query coming in from Sandeep from Bangalore, saying that he has 100 shares of Apollo Hospitals, which he's bought at 3,200 rupees per share. He wants to know how this particular counter looks like. Kunal, what's your take on Apollo Hospitals? A lot of momentum coming on this particular stock as well, along with others of late.
Cheryl, I agree. The structure is really encouraging, but at the same time, counter is constantly facing resistance at 3,280, 3,300 kind of mark. The trend is really very good. So one needs to keep in mind that when we move on to such segments, we need to buy on corrections rather than buying on breakouts. Yes, there was a breakout on the chart, and that's why many people are must have bought about 3,175. Hold on to it. The structure is not bad, but if any by any chance the counter reaches 3,000 mark, add little more and hold on to it. Trend is very strong. You may take little more time to encash some profit, but definitely think of averaging your position near to 3,000 again.
Raghavendra, now there's been a lot of interest in some of these counters, right? And in fact, Jaykumar is asking about IRFC, currently trading about just over the 20 rupee mark. Would you buy this for the long term? Are you confident about the long term growth prospects?
Well, Alex, if you see the entire thrust of government in terms of development of the railways, with Mr. Piyush Goyal heading the Ministry of Railways, is a positive. Overall, government has also declared their focus on disinvestment plans going ahead, which could bring in some private equity players or new investors and bring us freshness of ideas in across the government-owned entities. That said, the IRFC could also be beneficiary of these two government policies. And if you hold the stock again on dividend play, again on a safety gauge, this could be a good stock. But that will not be like a doubler from here, but a decent outperformer to the market in the quarters ahead.
All right, our next query is coming in from Manav Thakur. He wants to know the view on Maruti with a 3 to 4 month horizon. He's saying that he's bought 8 stocks of Maruti at 7,100. Wants to know whether he should hold or square off. Kunal, what's your take coming in on Maruti?
If I look at the formation, it's very encouraging downward falling wedge formation on the chart. The decisive bottom is already made at around 6,400. Counter since then is in the upward trajectory itself. Today also it's trading near to the high of the day. Consolidation breakout is still pending, so watch out for 6,750 kind of zone. Once it goes above 6,750, I expect the counter to reach 7,600, 7,700 because our viewers' position is going to be a little longer. Yes, it's a clear buy. Keep the stop loss, maintain the stop loss of 6,400. By any chance it goes below 6,400, I would suggest an exit. Otherwise, stay bullish on the counter.
Raghavendra, I'm not very sure what the next question is, but I will read out the names that he's talking about. Parth is asking about All Cargo Logistics for one, which, as I remember it, for the last at least 8 to 10 years has been a stock that a lot of people have said will take off once the logistics sector picks up. Is this something that you want to bet on for the next decade or so? And the second one would be SIS, which is a very specific play on the security side.
I would avoid this stock at current levels, as you have very rightly cited that this company seems to be very promising on paper, or at least with their projection plans, but have not delivered either in terms of earnings or even in terms of the stock performance. So I will give it at least 2 quarters of consistent outperformance in terms of the earnings growth, profitability, and the stock performance, where I see some institutional buying also before I enter. But current levels, All Cargo could be an avoid. Moving on to SIS, it's a fairly new listing with around, I guess, around 3-4 years of history. But the company has expanded significantly across pan-India, have taken up few stakes in companies, I think in Australia and a few other countries. But the business which SIS is into is security systems and providing human resource related to that. The economy of scale doesn't work well, whether you expand in 2 cities or you expand in 20 cities. That has been a concern of investors in most of the earnings call of lately in the previous quarters. So SIS also, though looks promising, but would be an avoid unless the margins pick up, especially because the economy of scale with their expansion is not working. So SIS Limited also would be an avoid.
Viewer query is coming in from Jay Kumar. He wants to know the view on Marks and Pharma for the longer term. Does it make sense to invest in this particular account, or Raghavendra?
The entire pharma pack is doing well, definitely on the overall sales going up, profit margin going up. Of lately, we have also seen the strength in US dollars is also boding well for these export-oriented pharma names. Marksans Pharma will also be a beneficiary of dollar strength, domestic sales picking up. Their R&D department is with their US FDA pipeline is also encouraging. So Marksans Pharma at current levels could be bought in a portfolio for a 3 to 4 quarter, that is 1 year horizon. So it's a buy or hold on Marksans Pharma at current levels.
He's got another interesting question for us. He's a regular viewer now. Quick Heal is the counter that he wants to know about, Kunal, and he says that this is a contender for a buyback. It's due for a buyback, and the current market price from what he's looking at is 187 or thereabouts, if you can pull up the chart. He's asking what would explain the recent price action and whether it is a good trading idea in the near term.
Alex, if I come to the very short-term behavior of the counter, yes, it's in a clear higher bottom formation, but many a times it gives a wrong breakdown or breakout. So I would say take this counter on a little positional basis, keep the trend line support in mind, and that's coming near to 180 levels. Today it gapped down open, and it's recovering from the lows. 180 is a good support to keep in mind. Initiate a buy at that level. Initiate a buy right now with the stop loss of 180. Also remember that if there are any pattern breakouts on the chart, they are going to be false. That's what has been my experience on this counter. So keep this in mind. Trail on the stop loss with the slowly and steady up move. The counter is really good. I think the counter may show us 225, 230 in a month's time itself.
All right, our next viewer query is coming from Rajan Vittal. He wants to know, he rather wants to actually invest in the power sector, and he wants to know how does Tata Power actually fit into that entire scheme of things, and how long should he hold on to in case if he's looking to invest in Tata Power. Raghavendra, what's your view on the power sector, especially Tata Power?
Broadly, the power sector has come out of a 10-year consolidation, and we believe it will be an outperformer and a sector to watch for upside in the years ahead. Coming to Tata Power, it's a buy. The company has a very good mix across different power spaces, and their new thrust on renewable power is also very encouraging. Tata Power also has shown some interest in developing and foraying into electric vehicle development infrastructure in terms of the recharging infrastructure for EVs. So that is also a big upside trigger. In terms of corporate governance, definitely it's a plus. So Tata Power would be a buy on any correction. Even at current levels, we are bullish on Tata Power for a longer term horizon.
All right, we've got a mail. We don't get very many mails nowadays. In fact, almost everyone chooses to watch live. But this one is from Sandeep from Bangalore. And he's asking about IndusInd Bank, and he's asking for a target for next week, Kunal. He's holding around 200 shares at levels of 940.
So again, Alex, next week itself is going to be very short term. But yes, the charts are encouraging. Today's gap down open and stock is trading near to the high. I think next week we can expect around 995 to 1000 levels. But watch out for the stop loss at around 890. If that's triggered, exit the counter.
All right, we've got two queries coming in specifically for HCL Tech. One is from Geeta Sethi, wants to know the view on HCL Tech over the longer term, and also we just have another query coming in from Sumit Kumar. He's bought HCL Tech at 930 rupees per share. He wants to know whether he should hold or sell. Raghavendra, I will come to you for both of these queries on HCL Tech. How does it look over the longer term, and also what should Sumit do with this particular counter? He's bought it at he bought it at 930 rupees per share.
I would say hold on to this company. If you see the commentary of the major IT companies here, and HCL Tech also falls in that large cap IT companies basket, the overall spend of US and Europe from where the Indian IT companies get their major business has been going up. That is very encouraging. The order size in terms of per ticket order have gone up for HCL Tech in the last 3 quarters. We believe US dollar will strengthen versus the Indian rupees in the next 1 year. That would augur well for HCL Tech. So the investor who is holding should continue to hold, and someone is looking to enter. Yes, this recent correction is a good opportunity to enter HCL Tech for a 50 to 20% upside in the next 1 year.
All right. On that note, I'm going to have to end the query segment just a little early today. Unfortunately, we have to speak to somebody on the channel with regard to earnings. We will be back on Monday, and we'll be back a little early, 11:15. Do remember, 11:15 is when we will go live on Monday, and we'll take all your queries then. We're slipping into a short break. More on the other side, so do stay tuned.
अधिकतर प्लाईवुड से फॉर्मल